Yes, this is not just a title, and I'm about to show you exactly why you should panic. In fact, it's kind of hilarious how your various social media experts and various YouTubers have flipped since yesterday to today, and their entire thesis now gone from bearish, and the market is going to implode on itself to higher highs than before, and now the market is going to rally even far higher than before. Insanity. No, that's fucking utter nonsense. Now stay with me for 5 minutes and I will show you exactly what you should know about, and in essence what you should research, what you should do in essence, right? And you'll know exactly what's going on. Just stay with me for 5 minutes exactly, and if I will earn your respect, just don't forget about that like and subscribe button. They're absolutely free and it means the world to me. So let's get on this. Look, I mean, we're gonna go the same way we've done this yesterday, and just the same way. And the irony, by the way, before I get into this, the same irony is that the very same tools, and if you don't want to trust and suddenly you don't like what I'm about to say here, don't forget that the very same tools that yesterday predicted what you did like, and when I told you not to panic, the very same tools are the ones who are now predicting that the market will continue downwards. In fact, those who have listened and paid attention, what did I say yesterday? I said that the market, although you shouldn't be panicking right away, right now, but I did mention and say that the overall momentum is still going downwards. And guess what? Unlike your friendly neighborhood YouTuber, I am consistent, and it all is data based. Basically, there is no biases in what I'm showing you. In fact, let's go over this as I was about to. Look, 1 minute looks bullish right now, and just like I said yesterday, and in fact in my community it is well known, and we kind of made fun of this and understood that this is exactly what's going to happen. The market will rally upwards to close, fill in that gap. It is kind of amusing how the momentum now going from, that rally now is flattening and going sideways and preparing to break down. We are roughly right now at the edge of the channel of the 1 minute, but that is very much insignificant. In fact, we are seeing how momentum is flipping over. So to be more accurate about what we're seeing here is that probably the momentum is about to flip over and fall off into the next channel. Now that's probably the more probable thing to think about right now, given that what we're about to see in the larger time frames. Let's go over the 5 minutes. 5 minutes is actually showing the deterioration, how the momentum, consider this as your speedometer, and your speedometer now is showing a downtrend. Basically, you now gone from going 150 kilometers an hour, now you've gone to going about 30 kilometers an hour. You're still going, but you're about to hit the limit, if you will. Now, if you pay attention, we are also now kind of at the ceiling, at the top of that 5 minute chart trend, right? The resistance, our diagonal channel within which we have been residing and moving into for the past several sessions, if you will, couple of weeks if you pay attention really, and more so this is a continuation of that flat curve that we've been talking about all along. And again, most people are missing out exactly on this really factor. So what it is that you need to be doing is better research. You need to be paying more attention to what the market is actually telling you, to what the market is signaling and screaming at you. And so technically what you should see this is as, instead of a buying opportunity, which I'm seeing a lot of fronts, look, we've seen this before, unless you're a short-term trader and you understand the forces behind the support and resistance levels and how the diagonal forces play into all of this, you shouldn't be dealing with this. In fact, you should see this as an opportunity potentially, as maybe, again, not financial advice, but if I was in those shoes who have a significant portfolio and seen a decline that hurt you within a single day, that just signals and goes to show that your average or cost average is very, very high right now, because you've been bringing it up by DCAing all along without thinking twice. Well, guess what happens? If your cost average was relatively low while we started flattening sideways, and your cost average was cost base is somewhere around here, and slowly but surely as you are DCAing while we are moving sideways, your cost basis is creeping up and going higher and higher and higher until, guess what happens? It is on the bottom of the current channel. And one red day, all it takes is one red day, just one red impulse for you to lose your merit and to lose your confidence in your thesis. Exactly as you can see right here on the chart. Just a tiny red day and boom, you are now seeing red. Very unpleasant. That's the trick. They force you without you noticing. The market makers, in essence, that's kind of they implant the idea in your mind that the market always goes up, and even when there are these deeper corrections, which, by the way, in all honesty, this is as shallow as it gets, and it is merely a process within a larger process, which we're going to see in a couple of seconds. Okay, so check this out. Now we have analyzed the 5 minutes. We see that the channel, we're about to hit the ceiling, and coincidentally we're also curving inwards. Kind of coincidental, call it as you wish. I will say it's too convenient for coincidence. All right, as you can see, we are right now at the ceiling of the 5 minute channel, and we're curving inwards. Now, can we run higher? Well, let's see how the momentum is playing out. Right now, the momentum on the 5 minutes technically is below that 50 mark, meaning it's more bearish, although we are seeing that entanglement, but that is happening due to loss of momentum simply because it's a Friday and there are less systems and less people moving less money around right now at the end of the day. If we're looking, and it is at the end of the day, look quite literally, if we're paying attention to our 30 minutes on the other hand, what we can see here is very interesting. We can actually see that very same curvature that we were seeing on the 5 minutes, but a lot less pronounced, right? We are seeing that we are moving within the same channel, give or take. Pardon my inability to draw straight lines, but you get the idea, or rather, let me help you with that. Kinda like so. Kinda like from here to here. We are moving within that very same channel that we saw earlier on the 5 minutes time frame. And so as you can see, we're about to curve inwards, meaning we're about to at least hug or potentially get entangled with that, and then within that resistance we are seeing signs of loss of momentum, meaning hugging, testing, retesting, potentially yes, crossing, but overall the trend is downward. Yes, we may break through these support and resistance levels. As you can see, there is such an idea as a slippage. I hope it's not foreign for you by now. You've been enough in the community, or if not, definitely sign up, join in. By the way, I'll talk about that at the end. It's discounted right now. So what are we seeing on the 45 minutes? Exactly the very same thing. As you see, technical analysis does allow you to make sense of what is happening in the short/long term. It just depends on how well trained you are at identifying the various trends, directional movements, forces, and all that beautiful stuff to bring it together to a singular equation, if you will. Now, 45 minutes actually is a very nice time frame that I use on purpose in order for it to sort of make the transition from 30 minutes to an hour a little bit smoother, so not to just discombobulate, right, and make you completely lose your sort of ground to what it is that you were looking at. So that 45 minutes makes that transition a little bit more smooth, right? As you can see, so far we've been having a corrective movement to the upside, right? A corrective rally, very nice, that's just nice, but it does seem like it ran its course. That's it. It's basically running out of momentum. So now what's going to happen now? Once it drops and starts correcting to the back end, right? And our D, which is a good representative of bearish momentum, becomes dominant, and we can actually see who is dominant right now through the numbers right here on the right side. So the higher number, of course, is the one that is on top. If we zoom in fact, we can see that, but that is unnecessary because we can determine who's more dominant simply by seeing 99.96 over 99.74, and you see they move in tandem, and as you can see now they are diverging, meaning that more divergence means more strength to whatever force is dominant, which is on top. In this case, of course, the D is on top, representative of our slower moving average, and that basically represents our bearish momentum, to kind of put it in perspective so you kind of understand better if you're not familiar with the terminology. Also, the moment we cross that 80 range on the regular RSI, it's 70, the center is always 50, the bottom is 30 on the regular RSI, in our case is 20. Basically the RSI supposed to be a little bit more sensitive, but at the same time being more sensitive, you'll have far more false calls. In essence, that requires a little bit more of the market, a little bit more evidence, a little bit more of that directional movement to serve as evidence that the market is actually moving in whichever direction. Now, as we're seeing, we are basically running out of momentum and flipping over as we just looked at the numbers, right? That kind of matters. Also, now let's go to the 4 hours. That transition now symbolizes a longer duration sort of outlook on the price action, meaning earlier here we were looking potentially towards the end of today's session. We are, and maybe a little bit, just a tiny little bit, into the next session. Right now, by looking into the 4 hour time frame, basically two candlesticks pair one day, right? We are looking slightly further out if we can identify what it is that the market is doing. In fact, arguably, looking at this, the market is very bullish, although still being in bearish territory. Do not forget that everything below 50 is bearish in its essence. Although that mixture, that borscht, if you want to call it as such, symbolize that potentially next week we are still looking into somewhat positive bullish momentum, which can symbolize a crossing over that yellow line that we just put a couple of minutes ago. And now it is sort of symbolizing on a larger time frame that we may see a crossing and maybe a retest, a potential retest of maybe even these higher levels. Although looking into how next week will play out, and as we're going to look at the overall sort of trend and how things look on a larger scale of things, we may realize that this may serve as ceiling, and all that leftover bullish momentum, all it represents is that process of entanglement and retest. So that slippage that we spoke about earlier, going above sort of that marginal error for retest purposes. Again, really realistically speaking, it's the buying and selling forces arguing back and forth whether they confirm, agree on the price or not yet. Now, pardon me. Now let's go 4 hours. 4 hours actually symbolizes a little bit of a longer time frame, which in essence being that bullish, right? So we're saying this is really bullish. And now let's see our daily. Our daily is not as bullish as our hourly. Although we are seeing the confluence of the forces, this is very important, the confluence of the forces, it is important that it's happening below the 50. That is a significant mark that we are still in essence in bearish territory, in bearish dominant, but once we have that crossover, that again means a little bit more bullishness right there. It doesn't have to happen. In fact, at times we see the forces come by one and the other just real close, almost for crossover, because basically where our momentum is shrinking, but then it opens up as the momentum amplifies in whichever direction. So that daily is actually uncertain. This daily shows that potentially next week we will end up playing out all the way to 69 potentially levels. It may still show some bullish behavior, and maybe that we are still far from over and testing these sort of this the bounds within which we have been moving, the range we've been moving, and so that may potentially imply a finalized movement to the upside right here. As I said, 69 area, give or take. But then again, if we're looking on the overall grand scheme of things, and we're seeing that it still did not affect our weekly really that strongly, and we still are entangled and pointing downwards on our weekly, and definitely are very bearish, I would arguably say that this does not symbolize anything other than the flattening of the curve right here. That curve eventually will stop, leading to these corrective movements to which the average Joe has become accustomed to and anticipating, and all of the zero DTs will crash out on whatever day will happen, which will bring us lower to, as I said, roughly around 66 levels, 65 levels. Yes, that may not happen tomorrow, well, of course not tomorrow, but you understand, it may not happen throughout next week immediately. In fact, throughout next week we are seeing somewhat more bullish momentum. So like I said yesterday, calm the fuck down. But on the grand scheme of things, this is more of an opportunity for those who have basically the chance to learn and understand what it is that's going on in the market, instead of celebrating this very misleading price action. This is exactly why you should be panicking. It is very misleading. It's going to force a lot of people to lose a lot of money. Now, with this behavior, they have even far more conviction. They think the market simply cannot go down. It always corrects, no matter what, every time, no matter when the market opens up a gap, small, large, doesn't matter. It always closes that. No, that's not true. What is true that 80 to 90% of all gaps do get closed. That is true. But sometimes some of them can take years to close. Years. In fact, if you look back a couple of years ago, you'll find out that several of them were opened up around the 2020 mark, wink wink, and then were closed around the 22 mark. So basically 2 years, 2 whole years to close some of these gaps. Some of them took a year. Some of them took a year and a half. Right? So gap does not necessarily mean a movement in that direction to fill the gap right away. That is exactly what the market makers want you to be conditioned into. So that's a very, very false signal. Do not use that as a signal. I mean, you do you. Of course, at the end of the day, none of this is financial advice. It's just the, mere crazy bananas talk of some dude on the internet, which, by the way, that dude is Gregory, right? I've been working in the industry for almost 2 decades. I probably just scratching on the bottom edge of that two-decade mark. I worked for various companies, from a junior to a senior to my own sort of independent analyst. I've been doing this for many years. I've seen ups and downs, and I can tell you that this is just absolutely beautiful in how it's just gonna force a lot of people to be dumbified into believing that the market cannot break down. And the scary thing is that if you would know the cycle, would understand the actual technical analysis, which I invite you to join the community. I highly implore you to do that now while it's still cheap. In fact, here it is. Here is the community. You go to patreon.com. I've changed. It's no longer Investory. There are far too many Investories around, so it's just simply my name, Greg_H, or you simply can go to Google, look for Gregory H Patreon, and you'll find this beautiful, special, unique thing that really stands out. You can see it right there on the left top, right? The address is right below, patreon.com/Gregory H, right? With the underscores. Don't forget, it will help you navigate directly to that. Now, the reason you should join now, last month, this tier, this $50 tier, which you are not able to see because I'm a moron, I will show you all in a second. Like so. I believe you guys should be able to see it now, or not yet. Can you see it now? Okay, perfect. You can see it now. That $50 tier last month was $30. Okay, it was a special discount. It is still discounted. Next month it's going to be $70. And the month after that it's going to be $99. Okay? So definitely do not miss out. Join now, lock in that price, and yeah, you can get to the extra discount if you pay annually by clicking that little thingy, and then instead of being $50 a month, it will be $40 a month. Those tiers are merely roles that automatically are given to one-on-one students, which, by the way, not to forget about that, you should definitely want to know and explore that option. I still have one spot, boys and girls, one spot, and I already have several people asking about that spot. So I highly recommend joining, signing up, so you know how to analyze the market on your own and not to be overexcited in a circumstance like we're having right now. Let me show it. Here it is. You can see it on the screen right here in the center, kind of next to the big gigantic ad thingy, right? You can see that transition, that crossover that we're having is a very bad sign, but most people are blind to it. And so that's exactly why you should panic. Don't panic really, but you should be aware of this. And most YouTubers, in fact, now having the sentiment and the narrative that no, higher highs, to the moon. Guys, really, to the moon at this stage? I mean, haven't you learned anything after all these ups and downs? That the market, if it would have wanted to go up, and in fact, wouldn't you want to trust the very same tools that when you guys are panicking, these are the very same tools that bring you down to earth and to sanity, right? Those are the very same tools that give you the voice of reason. I would highly recommend joining now and learning, because then you're going to understand, instead of relying on various friendly neighborhood YouTubers and various financial experts that are experts like I'm a banana or a ballerina. In fact, I probably am more of a ballerina than they are experts in finance, as far as I've seen. Just, do yourself a favor. Spend this money so you'll not lose more money than what you will end up spending on actually learning and becoming truly independent. Do yourself a huge favor, because all of these, including the academy right now, the one-on-one, these tier, everything is highly discounted, boys and girls. All of it next month will be more expensive. From now on, the Academy every month will be going $100. Every month it's going to be becoming $100. Every month more expensive. So join in right now before the end of the year it's going to be $4,500. It will stop. It will stop eventually. The original price of the Academy, the one-on-one, is $10,000, and I'll probably never end up. Probably, maybe, we'll see, but probably not anytime soon that I'll end up charging that number. But the price will go higher. Boys and girls, join now. And even if you don't want to join, you know what? Do me a huge solid favor. Like, subscribe, watch the video to its completion. Trust me, it helps a ton. That's it, everyone. I hope you all have a wonderful day. I hope you're now a little bit more aware. I hope you all will have a wonderful, relaxing weekend. Thinking about these things, meditating about these things. You got to. If you're not going to be prepared, the market will catch you with your pants, with your pants down, and when the tide comes in, we see who's really swimming naked, right? And those who don't know any better will be those who are swimming naked, boys and girls. Get ready. Things are about to get really hectic. Most people will not tell you this very unpleasant truth. I know it's unpleasant, but I'm not here to tell you what is pleasant or what you like. I'm not here about biases. I'm just here to tell you the truth. Peace out. See you on the next one.